Hi traders, it's Amelia from Market Compass. Thanks for joining me today. If you watch me on a regular basis, you know I am in Florida. I have my surfboard behind me. That's how you know I'm in Florida. In any event, right for this video today, I'm going to talk about what's coming up at Market Compass really quick, and then I'm going to walk you through the data, the market moves so far. This morning, it's October 2nd, and there's still a lot going on. So you can catch me coming up in Dallas. If you're in the Dallas area, I'll be at the Money Show on Sunday, October 13th, and I'll be giving a Forex Global Macro Trading presentation. Remember, Brexit's only 29 days away, so it might be important to hear that one if you're in the Dallas area. That is the Money Show. And super fun coming up the first week, basically, of November is Bally's Las Vegas Traders Expo. I am teaching a global Forex masterclass, a masterclass on trading foreign exchange in Las Vegas on November the 7th. So check that out at Traders Expo. You can register. Stuff will be up on my social media, and if you sign up for my email list, you'll be able to register through that as well on www.marketcompassllc.com. This is the first time I've taught a masterclass. Who knows, it may only be the last time. You're definitely going to want to check it out. The next day, November 8th in Las Vegas at Bally's, I have another global macro traders outlook for November. So they're both going to be exciting. I'm really looking forward to it. Vegas is so fun. If you want to take a few days, come to the expo. Go hit some great restaurants in Vegas, some great nightlife, and of course, run the Red Rock Canyon. I'm an avid runner, and I always go out there and run it when I'm there. All right, let's take a look at today's markets because there's a lot of stuff going on. As you can see here on my screen, we're down heavy today in the Dow Jones. Stocks are down heavy, U.S. equity markets, 480 points right now in the Dow, and down 53 points in the S&P 500. So it's a heavy risk off day. This stems from global growth concerns or U.S. growth slowdown concerns. Let me just show you this real quick. We had some economic data out this morning and, of course, yesterday, which wasn't so great in the United States. And here we go. This is from October 1st, and it captures also today. So yesterday, ISM manufacturing, that's the manufacturing PMI survey, was out. It was down a lot. It was expected at 50. It came in at 47.8, and that's not a good reading. Anything sub 50 is considered a recessionary territory in the manufacturing sector, and that's why equities started to fall yesterday. Today, they are continuing to fall, U.S. equities, because we had an ADP private payroll employment change of 135. It came in for September. It was a little low. 140 was expected, so a little low, not too off. But the previous month, August, was heavily revised down, and that's what the market was reacting to. So this 195 in August, it got revised down to 157. So 2 days of subpar growth indicators in the United States, and equities are down pretty heavy today. Let's take a look at the VIX index, the measure of volatility. Okay, here's the VIX index for the S&P 500. This is the measure of volatility for the S&P 500. If you've been on my monthly global macro risk event webinars, which you should sign up for, they're great. You know, I talk about this. When equities fall, volatility spikes or volatility jumps. And this level here, this 20 level on the VIX is, that's kind of the break even. That's the indicator that when we approach 20 and break it to the top side in the VIX, the markets are considered volatile. So I just wanted to show you that. There was some commentary out today, I think it was on CNBC, that October is a very volatile month in markets historically. And so I wanted to see if that's right or wrong. So I don't know. Let's take a look at it here and we'll see if it's right or wrong. All right. This is the VIX index once again. And this is the last, 5 years of it, plus the average from 2014 to 2018. And this is the average line here, this dark blue line. This is monthly. So you can see seasonally, what the VIX, what volatility does. You can tell here right away on the chart, just looking at it, August is a really volatile month, and so is December, year end, also volatile month. Here we go here in October, and that is volatile, not as volatile as August has been historically or December, but it is a volatile month, so that is correct. So here we go. This is the 5-year average right here. This blue line is the 5-year average, and you can see it is elevated kind of if you look at the track across to other months, the 5-year average. All right, so since we're in the fourth quarter, now that we've looked at the seasonally adjusted, the seasonality, I should say, of volatility in the S&P 500, we know that October, the start of the fourth quarter, and December, the end of the fourth quarter, are 2 volatile months. So file that away for your trading. Let's take a look at some currency moves this morning in the G10. This is a one-day change. Yesterday, the 1st to the 2nd, overnight, and the base currency is the dollar. So we're looking at G10 moves against the US dollar. The yen is strong this morning. Unsurprisingly, why? Because volatility is high and equities are falling. So your safe haven currency is going to come into play, the yen. Canadian dollar is also losing a lot of ground this morning. I'm not sure why, because there wasn't Canadian data out. Kiwi is actually doing pretty well for a risk-off day. Euro, and sterling are just hanging out, not doing much. We have a little bit of appreciation today on euro, but it's still below that significant level of 110, the figure. Sterling is also just hanging out. We got some news yesterday. Boris Johnson submitted a new negotiation plan to leave Brexit with a deal, and EU hasn't commented on it. So I think both euro and the British pound are just kind of hanging out till we get some sort of response from the EU on that Brexit negotiation he submitted yesterday, the points of the negotiation to leave with a deal. All right, let's take a look at yen because, all right, here's dollar yen this morning. You see we have a support level with both the 50-day and the figure at 107, the figure right here. And I think we're going to test it today. I think we'll move down to 107, the figure, looking for a break. We're at 107.20 now. If equities keep falling heavily, they're down over 500 points now, we can definitely test that level to the downside, the 107, the figure, for sure. Let's look at a cross real quick. Aussie yen. Aussie's been falling because the Reserve Bank of Australia cut rates the other night. And so we know it's falling and we know yen is strong. So we certainly want to look at Aussie yen, the cross. Here it is. It's been trending lower in a nice trend for a long time now. Here we go. So that's 72, the figure. We're trading downside on it. It has gotten to this 70, the figure level back in August. This is a really significant level in Aussie yen. We've talked about it on my Global Macro Risk Event webinar. And while we're not near it right now, it doesn't mean that we can't be. Again, we did break it a little bit. We got down below it. You see we hit 69.96.7 August 26th. This is such a huge level, though. It's going to have to test it a few times before it breaks significantly. But for right now, we're sub 72, the figure, and I think we can stay there today because U.S. equities are down over 500 points right now on the Dow. So I look for that to continue to trend lower nicely. Let's look at the single currency, our friend the euro. As I said, it's just really hanging out in this 108.80, 110 the figure range. So pretty tight range. You can even make a case it's like, no, it's really 110, 108.80 is the range. 110 the figure is a significant level on euro. And so I'm a little bit surprised that once it broke traders didn't push it much lower because this is the big macro trade, directional trade that a lot of hedge funds and real money funds have been looking at. And I think the reason why it hasn't moved more meaningfully is because it's October, we're 29 days away from Brexit, and we don't have an answer yet. And so people are kind of waiting for some clarity before they push both euro and sterling either up or down. It's just kind of hanging out waiting for news. Let me just show you how big of a deal this 110 level is. This is a 5-year chart of euro. Here's the 110 level. We broke downside and we're hanging out. And there's really no support to 105, the figure. So this is a big level break, a big psychological level break. And I think if we stay under 110 and we get more negative Brexit news, that this will be on the move lower. Let's just look today at some top stories that are driving markets. As I mentioned, the weak U.S. economic indicators the last 2 days is one big story. Let's just see if there's anything else. You know, I think these IPOs, the Peloton IPO not going well and WeWork pulling their IPO have also, you know, negatively impacted sentiment in U.S. equity markets. Yeah, growth fears are mounting. I think that's pretty much the main story. The Fed president of New York is saying the outlook is strong. The rear view of the economy is strong and the outlook is mixed. So, you know, that's not helping because what do markets want? Clarity, and we just don't have it right now. There's a big risk event coming up, and I know you guys know what it is on Friday. What is it? Come on. U.S. Payroll Friday. Here we go. Let's take a look at what's expected so you can start thinking about your trades, getting them in order. All right, Friday, 8:30 a.m., U.S. non-farm payrolls will be released. Traders love a good payroll Friday or a bad payroll Friday. I mean, either one, but we don't want a neutral one. 148,000 is expected. The prior read for August was 130,000. So if we come sub 148 meaningfully, you know, it's going to be a major risk-off day in the market. The other thing that could cause a risk-off day in the market on Friday is if we get like around 140, so just a little bit sub, but this 130, the figure is revised down in August significantly. So those are the two things you want to watch for Friday. As always, please follow me. Sign up for my free content, www.marketcompassllc.com. Fill out the box on the front of the website. You get free content. Follow me on Twitter at Amelia Bourdeau. Follow me on YouTube, Market Compass, and follow me on Instagram also at Market Compass. I do intraday updates, more so on IG Story, a little bit on Twitter, and there's a lot of content coming on YouTube, so make sure you subscribe. Thank you. Trade well today.